would be your lowest SDE that you would take as a listing?
Me personally?
Mm-hmm.
Yeah, kind of depends. The lowest SDE, you know, I can't really say because it depends on the seller. You know, I mean, sometimes you just I'm kind of a softie, so sometimes I'm just taking stuff to try and help people out, even though
And that is so time consuming.
it is, but
Okay, that's
yeah.
good though. I had one that was 30,000 and I'm thinking, you're not even making enough for someone to come in and earn a living.
Yeah. Well, and that's the thing. I mean, sometimes like if it's got to be close 70, 80, closer to 100, just because here in California, you just can't really make a living. I do have a minimum that I charge, and so it has to
Yes.
make sense economically. And a lot of times that's what I'll tell them. And you know, if they've got SDE of 20, 30, 40 grand, it's like, look, you know, it really doesn't make economic sense for you to hire me, but
That's
I
right.
could refer you to somebody else that has a lower minimum that might be able to help you. And I'll
Tawnya,
just refer them out. Yeah.
but how about the people, the business have a negative income, but they said they will show you they're making money because they try to reduce the tax. So are you going to take that listing?
Probably not.
Oh, no.
I'm not gonna try and convince any buyer that there's money that hasn't been declared on the tax return. So, for example, you know, tax returns that show 60,000 in gross annual revenue, it's the business is not saleable, at least not by me. Because if they made 60,000 in gross revenue the entire year, then by the time you subtract out the expenses and stuff, there's just nothing left. And when you, I literally
Oh,
what
the
I'll do
gross
is recommend
revenue.
that they market that themselves. Or sell it on Craigslist or sell it in, you can go to Biz by Sell and put an ad in there yourself as for sale by owner or something. But it doesn't, when they're too small like that, it's just not, it's not
No,
feasible.
Tawnya, the gross revenue over 500,000, but I mean the profit is negative, not the.
Yeah, I mean, if the gross revenue is 500,000 and it's showing the tax returns are showing negative, then I'm going
Yes.
to do that. I'm going to do a recast. I'm going to figure out what I think they actually made, but I'm not going to say if the tax return said there was 500,000 gross revenue and they're telling me there was 750. I'm not saying there's 750. I'm saying the tax returns say 500,000, so that's all you get.
Thank you.
So I'm not going to add any cash over and above what the tax returns, what was declared on the tax returns, just because they say that it exists, because I have no reasonable basis for believing that it exists.
Okay, thank you.
Right?
Yeah.
So here's one thing you need to understand from a legal standpoint, and this is not legal advice, but it's my opinion. But since I'm an attorney, I'll tell you anyways. But there's this thing in the law called negligent representation. Or negligent misrepresentation. And so we all know that a intentional misrepresentation is fraud, right? So there's also this thing called negligent misrepresentation. And negligent misrepresentation is when you are making representations which you don't know that they're false, okay, or that would be intentional, but you have no reason to believe that they're true. So that is, when some seller is saying, oh yeah, I know that I only declared 500,000 my tax returns, but actually my real revenue was 750,000. And then you as a broker put down gross revenue 750,000. Well, that is now negligent misrepresentation because you have absolutely no reasonable belief that that is true. So.
Good.
Thank you.
So don't do it.
Yes, thank you.
Just don't do it. Keep yourself out of trouble. Keep yourself out of court. Louis, what's up?
Hello, good morning, good afternoon, wherever you're at.
Yeah.
Ms. Walker said SDE. What does that stand for? You know, I'm new to this, Tawnya, so I
Seller
linked over here.
Discretionary Earnings.
Well, I'm sorry, what was that again?
Seller's Discretionary Earnings.
Okay, and
Okay.
that is, we're looking for that number somewhere on their taxes, or do I find, that's just what,
Seller's discretionary earnings is a number that we calculate. That's something that we do as brokers. We recast the financials or normalize the financials to show the economic value of the business as opposed to the tax mitigated value of the business. So typically the way that recast starts is we start off with, ultimately what we're trying to do is take the taxable income off of their tax returns and add back different expenses that, yes, they were expensed through the business, but no, they weren't necessary. They weren't true operating expenses. For example, the kids' college tuition. Okay. The repairs to the beach house, the boat slip, the things that business owners will run through the business in a normalized financial statement or normalized income, profit and loss, whatever you want to call it. What we're trying to get to is operating income and operating expenses. And that's it. You're trying to get rid of everything else. So SDE, Seller's Discretionary Earnings, is calculated. It is the simple equation is EBITDA, because we understand what EBITDA is, earnings before interest, taxes, depreciation, amortization. So it's EBITDA plus one owner's compensation. And so that's the easy equation, but it's really not straight EBITDA, it's adjusted EBITDA. And how do you adjust the EBITDA? It's really you're taking your taxable income or loss, and you're starting to add back the discretionary expenses that were not necessary, that were seller perks. Maybe the seller is expensing their automobile. They're expensing their vacation. They have travel expense in there of $12,000, which they were entitled to take, but the travel wasn't truly part of the business. They just run it through the business. Okay. So when you start off, let's say they started off with $80,000 of taxable income, and then you start adding back the travel expense and the meals expense and the auto expense because they don't have a delivery service or anything else in their business. And you add back, like I said, sometimes it's ironic when you have somebody export a general ledger from QuickBooks and you look through it, you see all these Costco, Home Depot, Lowe's, CVS, Ralph's, Walmart, all these entries in there, right? Well, most of those are not buying, office supplies. So a lot of those charges they're just discretionary to the owner. So we're going to add all those back. And you come up with a number. And that number is then there's a multiple that gets applied to that number, and that's your business value. So you have to be able to calculate SDE in order to apply your multiple, because typically most small businesses are sold on a multiple of earnings or a multiple of SDE. Yeah, Louis.
okay, thank you. No, yeah, because I've kind of biz by, they give the information on, we've talked about it here about how you guys, everybody here says business valuation is the hardest and one that you really need to know.
Yeah, art and the science.
But yeah, I appreciate it. Thank you. Thank you, Mr.